Imagine this, you just received a shiny new credit card. You swipe it for everything, a daily latte, groceries, and your monthly gym membership. But when your statement arrives, you pay less than the full balance. That's when the card's annual percentage rate, APR, comes into play. APR is the interest charged on your outstanding credit card balance, and it can quickly accrue depending on how you manage your credit. The actual APR you'll pay on a revolving credit card balance varies based on several factors, but a firm understanding of your card's APR can help prevent financial headaches. How APR works. APR is used to calculate interest for all types of financial products, including mortgages, personal loans, and car loans. But while loans and mortgages typically have a set repayment period, credit cards don't. For credit cards, your APR is the amount charged for carrying a balance, expressed as an annualized rate. However, your actual interest is calculated by dividing that number by 365, the number of days in a year. Each day, the credit card company multiplies your average daily balance by the daily rate to calculate the daily interest charge. At the end of your billing cycle, the credit card company adds all the daily interest charges to your outstanding balance. That said, most credit cards offer a grace period, the period between your monthly statement being issued and the payment due date. You won't pay any interest if you pay the entire balance by the due date. However, you lose that grace period if you don't, and the credit card issuer will charge interest on your existing balance and any new purchases from the transaction date. Types of APR. Not all APRs are created equal. Your credit card can have different APRs for different types of transactions. Introductory APR. This is a low or sometimes 0% APR offered for a limited time when you first get your card. Some credit cards offer introductory rates for 15 months, but they can be as long as 21 months after opening an account. But beware, the regular APR will kick in once the introductory period ends. Purchase APR. This is the APR charged on purchases made with your card. If you carry a balance month to month, this is the rate you'll pay. Balance transfer APR. This APR applies when you transfer debt from one card to another. It can be lower than the purchase APR, and some cards offer a 0% APR on balance transfers to entice you to move your other credit card balances over. Cash advance APR. Need quick cash? Think twice. This APR kicks in when you withdraw cash from your credit line. This interest rate is usually much higher than the purchase APR and typically starts accruing immediately, no grace period here.